Hello and welcome to this demo, SQL-Ledger accounting for attorneys stroke lawyers. My name is Julius Doyo. In this video, we shall be demonstrating how to receive payment for retainership and apply the retainership fees for services rendered. What is a retainer? A retainer fee is an advance payment that is made by a client to a professional, and it is considered a down payment on the future services to be rendered by that professional. How do we record retainership? For example, if the retainer fee a lawyer charge is 100,000 and the lawyer charges 10,000 per court appearance, the retainer covers all 5 court appearances. It is after exhausting the above that the lawyer can bill the client for any additional costs they might have incurred on behalf of such a client. Let's go to the software and see what it looks like. So in the software, how do we set up? A retainer fee is a liability account. And for the purpose of this, we are going to set it up as a prepayment. The software will be able to go in and track that particular fee and keep it. It will be showing a minus. We are going to use an asset account, but it's going to show as a minus. And anytime we earn the money, the software will deduct it until such money is exhausted, when it will now show red. But before we do that, we must make up some settings. Let's look at the chart of accounts. We go down here and click on the systems and select chart of accounts, list accounts. If you look at this, I have made some changes here. We have the bank has been changed, chop 1, chop 2 bank. That is our bank. We have here account receivable clients. We also have account receivable clients retainer fees. It is shown here. When we receive the retainer, you see that it is negative. It will be showing negative here. And that is the same thing as a liability. It is a liability account, please. Because I know many of us, we query this. We say, this is not an asset account. It's supposed to be a liability. Yes, it is a liability account. It's supposed to be one of these. But if we put it here, we may not be able to do what we want the software to do for us. That is why it is here. So let us go ahead and create a service that will be able to deduct from this and put the money on our statement of comprehensive income. That means we earn the money, we receive the money, but we are going to earn it. So to do that, we go to goods and services, add services, and here we put a code here. Let me say 1,000, and I will say legal fees, and I will select the income account here. I've already created it. For now, I will deduct the VAT because legal fees by our standards should have a commission, a VAT of 5%. So for this one here, the selling price, I'll just put 1. List price, I'll also put 1. And here the unit, we just put they deal mostly in hours. Lawyers deal mostly in lawyers. I haven't done that. I've linked the accounts. I'll click on save. It has saved that service. We close. Now let us go ahead and receive. Let's assume that our client, let's first of all go to account receivable sales invoice, and we'll click this. This is what we see, but we want to receive a returnership payment. We will go to add transaction, account receivable, add transaction, and we'll click. A customer has been selected. I want TV. Once we have that, we press the enter key to fetch all his information. We select the date that returnership was given. Let's assume it was on the 3rd of January. The invoice number will be imputed. We put a description here. We call it returner fees. Then here we now come down here to this account here, and we select the returner fees account. Then we receive it here. Let's say we receive it on the 7th, and it was done through electronic fund transfer. We put here returner fees. Let's assume the amount is 100,000, just like we saw in the slide. Once we click on update, we can see what this has done. The money will go to account, and the other leg of this transaction will go to our client here. We didn't put anything here, but we have put a description here. So having done that, what we do next is to click on post. Now once we have posted, let's look at our financial record. Let's look at particularly the trial balance. We click on the trial balance and we click on continue. You could see the money has entered our account, and this liability account, this one that I have made, even though I put it here, is represented here. It's a liability. We have not earned the money yet. The lawyer has not yet gone to the court to defend us or do anything on our behalf. Therefore, it is a liability. We are liable to refund it if he said he doesn't want the case again. So let us go and earn it. Let's assume that we earn it by going to sales invoice, and once we click on sales invoice, we select TV. It's automatically selected. We must select that account here. See it here, returnership here. So what we do next is to then say that, let me just put a small description here. Said court appearance for TV John. Now we will then select the product here. If we select this one, type as the code and we press the enter key, you could see this is what we have here. And once we select it, it's just showing one here, and we know that the cost of our court appearance is what? 10,000. So once we put 10,000 here, the software is smart enough to deduct this from that amount of money that the client has deposited and bring it up for us has earned income into our account. So having looked at this, this is all we need. Let us now post this transaction. Once you post, good. Let's go back. You can see the balance that is remaining. Let's go back and look at the trial balance. If you click on continue, you could see that this money that we earned, see it here, the money we earn is 10,000, the legal fees. It has come up on our statement of comprehensive income, and the amount that is remaining, we are still owing, we have not yet provided the service, is 90,000, which is a liability. If you check that your income statement, you will see that we have an income of 10,000. When I mean we, it means the law firm. This is what the law firm has now. So if you check the balance sheet, you will notice this. You will see that the income, since this one is here, is a liability, but it was here. If it was put down here, it would have been 90. But to put it down here, we are deducting it gradually. This is how the software works. So that is how to receive to be like a client and receive retainership and utilize it. We have just done one. If there are any other services that the client can, the lawyer will render, it will be deducted from that amount of retainership that he has with us. Thanks for your attention. I will see you in my next video.